So we are lucky to have with us today David Pierce. David Pierce is a Petra coach. He's got a storied past. He's also the only person you'll ever meet who has a Moe's restaurant themed room in his house. He apparently
Welcome. Welcome to Moe's.
went to Moe's, liked it so much he brought it all home with him. David's got a lot of accomplishments. He's got a book. We need to talk about your book more often too. And then I pulled this painting down, or
There
this
you go.
picture that you sent me once. So David also climbed Mount Kilimanjaro. Sent this really cool picture. He has shaved a little bit since he
Yeah.
was up on that mountain. And David has become our resident money expert, let's call it that. So when the CARES Act first started spinning around in Congress, David took it upon himself, grabbed a couple other team members, and those guys read every single page of that. And he's been reading every day since to stay up on everything that has to do with our CARES Act, PPP, Main Street funding, forgiveness. And as most people know, David, it changes every 24 hours. So every day in Huddle, we get a quick little update of what's changing. And we wanted to bring David to the table today just to give us some insight about what's happening in that particular space. We are recording this. What's interesting, David, is I'll get asked. I'm going to bet on 3 times. You want to over under on 3 times? How many people ask if we're recording this?
Over.
Over? You think it's over? All right, we'll take that bet. We are going to record this. It will be sent out in a recap to every person who registered for the webinar, and it will be on the website in a blog. Leah is behind that shield, and she's the one that's going to take care of all that for us, doing a fantastic job with that. So with that, David, I'll turn it over to you. If anybody has any questions, please put it in the Q&A box. There probably will be, and then I'll just bounce in and ask you the questions as we go. So the floor is yours, my friend.
Very good. Thanks, Andy, for the introduction. It is a pleasure to be here. For once, I'm an authority on something. I don't know if I'm an authority on anything much, but I'm designated authority on some things. So it's good to be here. As Andy said, this stuff changes every hour, it seems like. So some of the stuff I'm going to share with you will likely change before we get to the end game. But we're going to go with what we know, and that's what we're going to talk about today. So I'm going to share my screen, and we'll get started.
Got it.
All good?
All good.
All right. I really want to start off with a little story to kind of break the ice here a little bit. Many of you know, or some of you know, I'm from Louisville. I live in Louisville. And one of our natives here, his native son was Cassius Clay Muhammad Ali, a big hero of our local area. Well, yesterday, May 25th, was the 55th year anniversary of the historic Ali-Sonny Liston fight, where Ali went into the first round, knocked Liston out in the match, one punch. Interesting story. That was the second fight for Ali and Sonny Liston. They had fought a year earlier, and Liston hurt his shoulder in one of the opening rounds. And I think in round 7, he withdrew. And Muhammad Ali actually won that fight by default. They were pretty equal in points, evidently, but he won that one by default. So this was the classic rematch. So he comes in, knocks Liston off. So I compared that to kind of what we're going through today. I mean, we have been through or going through a prize fight. I mean, we've been knocked down by this pandemic. Some of us are still on the canvas. Some of us are on our knees, trying to get our bearings. Some of us are up, just like Ali was, jumping around. He's ready to go on offense. So compare that to what we're doing. So I want to start off today with a few words of wisdom from Sonny Liston and tell you a little backstory, which is kind of interesting about him. He is the original GOAT. He is the greatest and may still be the greatest. You compare him to Michael Jordan or something, but he is the original GOAT. This is a very young Ali, and there's a backstory, and I'll tell you about this. But here's something he said at one point. Impossible is just a big word thrown around by small men who find it easier to live in the world they've been given than explore the power they have to change it. So this was an inspiration for me. I read this a long time ago. And I think as entrepreneurs, all of us probably on this call, we've gone after the impossible. Many of us have captured that and overcome it. So a lot of his words are very inspirational that he used to overcome the obstacles that he had. This picture is kind of interesting. This is a very young Ali, probably around 12 or 13 when he began his boxing career. And a little backstory is kind of interesting. I grew up in the south end of Louisville. And on the street that I grew up on the first 6 years, before I was born, my dad told me that Muhammad Ali, then Cassius Clay, would ride his bicycle up and down our street. And he would occasionally interact with him. So he knew a little about who he was. And obviously, as he got more famous, he figured out who it was. Didn't really know at the time. He wasn't even boxing. He had a little red bicycle that he rode up and down the street. Well, the story goes, the bicycle is the reason Muhammad Ali got into boxing. So you just never know what fate's going to do to you. This is the building in downtown Louisville. It's now part of Spalding University. But in this building is an auditorium. And in the basement was a boxing gym. And it was run by a police officer named last name of Martin. Well, the story goes in 1954, Ali goes to this place for some kind of a meeting in the auditorium. He had ridden his bike there. And when he came out, it was gone. Somebody had stolen his bike. So Officer Martin was standing outside and Ali said, I'm going to go whoop some ass when I find out who stole my bike. So Martin says, Cassius, don't you think you need to know how to fight before you go kick somebody's ass? So he befriended Cassius Clay and put him in this boxing club and was the first trainer for Cassius Clay because his bike was stolen. And the rest is history. Obviously, he goes on to world famous, original, one of the greatest boxer of all times, but you never know what fate's going to do to you. So that's kind of an interesting story. So where are we in our boxing match? Are we on the mat? Are we up? Are we wobbling? Or are we bouncing around? So a couple more words of wisdom from Muhammad Ali, and we'll get into it. This is the classic fight. This is one of the poses, him standing over Sonny Liston. This is a saying, he probably didn't say it that day, but he said, I run on the road long before I dance under the lights. And again, as entrepreneurs, we know we don't just show up on game day. We have to put a lot of work in to get where we're at and to outperform. So again, another inspirational thing that he used to drive him to success. And this is a colorized version. This is the famous pose of him standing over Liston, round one. And I think what he's telling him is actually get up, because there's a lot of fear that he may have thrown the fight. He says, you got to get up. You got to get up. And he didn't get up. But so anyway, you go look at the backstory on that. That's pretty interesting. But here's one of my favorite quotes. It's just a job. Grass grows, birds fly, waves pound the sand. I just beat people up. Sometimes it's as simple as that. We just got to go beat some people up. We just got to go play the game, do what we're best at, and win, and just go beat people up. So again, I think that's one of my most favorite things. So enough of Muhammad Ali. Where are you at in this fight? Are you on the canvas, on your knees? Are you out bouncing around like the butterfly? Hopefully, some of these tools we're going to talk about today are going to give you that ability to play offense and not lay on the canvas anymore. A little about me, David Pierce, a CPA. I'm a banker by trade and my background, 23 years as an entrepreneur. I've been coaching with Petra for around 4 years now. We'll send you these slides with my contact information, but I'm not a prize fighter. But I have a background in those things. A few disclaimers. Basically, check with your consultants, your accountants, your lawyers, if you have any doubt about what you're doing in regard to any of these programs, and don't necessarily rely on the representations we're going to make today. This is just how we interpret the guides through work, talking to our representatives, through the readings we've done. So this is the best information we've got, but when in doubt, check with your consultants and your professionals. I want to do a poll right now. First of all, we always want to know how you're doing in the stress level. This is a very stressful time. We'd like to get a feel for our groups on how they're doing with their stress level currently. So we're going to throw up a poll, and the way it goes. So 1 is I'm not doing very well, and a 5, I'm doing pretty great, pretty good. So if you'll vote in this poll from a score of 1 to 5, how you're doing, we'll just see what the feel of our group is with us today.
All right, poll's live, David.
Poll is live. Please vote.
Can you see it on your side?
I can see it.
Okay, awesome. 39% threes, 42% threes, got some 25% 5, 21% fours.
Okay.
No one's laying on the mat, so that's good.
All right, well, that's good. That's good. All right, thank you for that. It's kind of there's your poll results. So 40, so 3s, 4s, and 5s. that's interesting, and Andy, you'll attest to this. When we started doing this poll 8 weeks ago, when we saw lots of 1s, 2s, and 3s.
Of course.
So I think people are beginning to recover, shake off the cobwebs, and beginning to look for offensive plays. So hopefully you're at that. We're going to talk today about a lot of the PPP forgiveness. So I want to let you know what the group is as far as how many of you have got PPP funds. So I'm going to throw up one more poll, and then we'll get into the material if you can. If you could throw that up. 1, you've got funds. 2, you've applied and have not received. Or 3, I did not apply.
So oh, wow, look, yeah. So most everybody has applied and received funding.
Okay, good.
A little bit, only one person did not apply, or 2 did not apply now.
Okay.
1 have applied but not received yet. That's a big number.
Okay, good. So most of you have gotten your funds or at least applied. For the 2 of you, the 8% who did not apply, good news, there's money left. And I'll talk about that a little later. So you're still not too late to get into the program. We're going to go over some current events. Like I said, this thing is changing every hour on the hour. So I'm going to go over just the latest headlines, talk about some legislative overview and some other resources that you want to consider. We'll spend a few minutes on that. Most of our time is going to be spent on the PPP program and the Main Street Lending Program, which is a new one, which isn't even active yet. Some tools to help you get off the mat and play offense. So what's some current events? This is interesting. Secretary Mnuchin on April 28th, after the first round of PPP funds were exhausted, he came out and said the U.S. will audit small business loans in excess of $2 million, and he warns of criminal liability. And the reason this happened is a lot of the public companies had requested funds, and it became public knowledge that like Ruth Chris had got $20 million and a lot of other public companies. So, and the money wasn't getting to the small businesses. So this was his threat to help recover from that. And the intention of the threat was obviously to get them to give their money back, which is what he gave them the ability to do. And you'll see in the statistics that the threat seemed to work. It all revolved around this representation that you made when you filled out your application, that the current economic uncertainty makes you eligible and that makes this loan necessary. You signed that when you applied, even if you don't remember that. That was a representation you agreed to. The good news is they came out after this threat and said any loan under $2 million, you in effect have met this requirement that you did, there was an uncertainty that you were eligible for. So anybody under 2 million cannot be, this does not necessarily apply to them, was a safe harbor that they granted. But everybody over 2 million will be subject to some kind of an audit. As a result of that, over $510 million, almost $500 million has been given back to the program, mainly by public companies. But there are other public companies that said, screw you, I was eligible. Even though I had other sources of funds, I met the requirements of the program, so they've sued the government. So who knows? It's a Wild West, guys. Who knows where this is going to end up? The good news, if you're under 2 million, you don't have as much threat out there as some of these guys do. Recent headlines. Let me move my screen out of the way so I can read all these. Rubio stated this week that Congress, at least on the Senate side, is supporting extending the 8-week period to 16 weeks. They even thought they would vote on this bill by Thursday when they recessed. They did not, and they won't be back till sometime in June. So who knows where that's going to go. The House is supporting a measure to allow 24 weeks to use your funds. Again, nothing official yet. We don't know if this is going to happen. There's also some other language you're talking about, changing or softening the 75-25 rule, which you'll talk about.
David, can I ask a question about that for a second?
Yes.
So that would lend itself well to, let's say, restaurants who, they got PPP dollars, they couldn't open because that business is not even functioning yet. It's beginning to open now. The timetable is really short. It allows them to kind of stretch that out. Is that accurate?
Absolutely. It's for those really impacted businesses who are at the mercy of the government for allowing them open up. Doesn't make sense for them to go out and hire a bunch of people during 8 weeks and still not be able to open and have to lay them all back off. So that's some of the thinking here. Extend that time frame, make it more reasonable to allow them to use the funds to bring their business back online as the opening up allows them to do. But that's correct.
Awesome.
And just this morning, Forbes ran another article talking about PP. In fact, they haven't used all the funds that are in the second pool. In fact, there's about $150 billion left in there. So you haven't applied yet. You ought to go apply if you're still eligible, if you think it's something you want to take advantage of. This is interesting. They said net lending in the second half of May was actually negative, meaning more fund was given back to the fund than was actually loaned out. I thought that was kind of interesting. So money's still out there. So if you have not applied and you still are interested, you should go to your lender and work on that. About $5 billion in loans has been made. Won't dwell much on this. Kind of interesting. The first round, the average loan size was $206,000. The second round was $73,000. So it seemed like the threats worked. More money got to the smaller businesses, which is really what it was primarily made for. So it seemed like that worked. And there's still funds left for you to take advantage of that. So here's the legislation. This is kind of just a cool slide, and we'll give you this. We'll give you copies of all these slides, but there's been $2.4 trillion allocated across the 4 different acts that have been approved by Congress in various ways. You know, small business support, tax incentives, healthcare spending, $2.4 trillion. The House recently passed another version of another act, the Act number 5, and they were allocating over $3 trillion to that one. So it's amazing the dollars are being thrown around right now. So the next act could double this amount if it gets approved. And the Senate said, dead on arrival, we're not going to do it yet. So who knows where that's going to go, but there's a lot of money and a lot of aid out there, which kind of brings me up to what I want to share. There are other resources for you out there, not just these loan programs. Just remember, these seem to be forgotten because so much focus was on the PPP side of things. But talk to your tax professionals and make sure you take advantage of everything that you can as an employer and as a business. There's unemployment, both state and federal, that could help your employees. There's sick and family care relief in the form of tax deferrals and tax relief there. There's a bunch of tax incentives that you can take advantage of. We're not going to go into all those, and I don't profess to be a tax expert, but do talk to your tax professionals. There's a lot of other things that can help you survive this pandemic in addition to these loan programs that they put forth. So let's talk about the EIDL, the SBA Disaster Relief Program, and the PPP program. First of all, the EIDL was the first thing that came out. This was called the Economic Injury Disaster Loan through the SBA. This was probably the easiest loan you could ever apply for and ever receive. In fact, it is a loan that you never had to talk to one individual for to get. You applied online, a very brief application. And then if you do get approved for it, it comes through emails and DocuSign documents. You never speak to a person to get this loan. It's really interesting. I've never done that before. The program changed a little bit from its origination to current form. Originally, the loan could be up to $2 million. The program was overwhelmed, said we want to spread the money around. So they reduced the maximum loan to $150,000. And then they added a grant to be associated with up to $10,000 of a grant that was advanced in advance of the loan approval based on $1,000 up to 10 employees. Many of you probably applied for this. Many of you probably had this magic number show up in your bank account saying, what the hell is this? Because they made no announcement. You got no emails saying you got this grant. So you may have gotten a $10,000 deposit in your account and not even know what it came from. That was the grant. And now they're beginning to approve these loans. And again, through email correspondence, you get noticed from the SBA that you've been approved for a loan. You click on the link and it tells you what you've been approved for. If you want to accept it, they'll send you to a DocuSign site. You sign the documents. In about 2 days, the money shows up in your account. Maximum $150. It's a pretty good loan. It is a 30-year loan, 3.75 rate, no personal guarantees. And again, the easiest loan you probably ever have requested and received if you applied for this. So many of you are probably getting this loan now. That will help you to a certain degree. It's not a huge loan, but it'll help you to a certain degree to meet some of your cash requirements. A warning on this though. This loan was designed to cover a lot of the same things that the PPP loan was approved to cover as well. If you use the EIDL's proceeds for those same costs, you cannot be forgiven for those costs. So what we're recommending is you put these EIDL funds into a separate bank account and only use them for cost outside the allowed cost definition, or just let them sit there until you get through this 8-week period. Then you can begin to use them for payroll and mortgages and interest and utilities and those kind of things. But if there's any evidence you use these funds for the same allowed cost you're claiming forgiveness for, you're at risk of losing forgiveness for those funds. So park it in an account, use it for only cost outsets, mainly working capital. So don't use it for payroll, mortgage interest, utilities, the things that the PPP funds are for, at least not inside the 8-week measurement window.
And there's some pretty hefty penalties with that as well.
Yeah.
Like 2.5 times the loan amounts. And I mean, it's when I read through those documents, it made me think twice about this particular thing for sure.
The best thing to do is probably just put it aside. And it's not a big number. You can set it aside and just let it rest until you get through your 8-week period. Then you can use it for those approved things. But yeah, if you endanger your forgiveness if you do that. So best practice is make sure you're just very controlled over what you use those funds for, and use a separate account to track those funds. We're not going to go into PPP because this is really how you apply for the loan. We'll talk more about that in just a second. We're going to spend most of our time talking about forgiveness because most of us are on that side now. We've got our money. Now we're spending it. Now we want to make sure we do everything we can to get forgiveness. So we'll talk more about that. But those are the 2 loan programs that are currently active out there. There's another we're going to talk about at the end of this presentation, which isn't available yet, but probably something we probably want to think about. All right, so some best practices. First of all, you should assume that you're going to be audited. You will be audited in some form or fashion. If you read the application for forgiveness, it talks about that. Either your banker or the SBA or both will perform some kind of an audit on your submission for forgiveness. Now, maybe a cursory review. Did you have a rent payment statement that shows that this was the correct amount? Who knows? But the best thing to do is assume you're going to be audited and prepare for that, which means developing a good audit trail of every expenditure that you make of these allowed costs, matching those with some supporting documentation. And the application itself for forgiveness tells you what you're going to have to submit to your banker to get them to validate your forgiveness. So just assume you're going to be audited is best advice. The next thing we recommend you do is if you haven't already, is you should deposit all of your PPP funds into a separate bank account only to be used for those funds. If you haven't done that, you could go back and recreate that. So if you're 2 weeks in and say, oh man, I didn't do that, you can still go back, open a bank account for your PPP, deposit the full amount in there, and then any payments you've made during that 2-week period, transfer those amounts back out to create that audit trail. And then going forward, when you make a payment on allowed cost, transfer those out of that fund. Let me show you, and I'll show you how that works. In reality, most of us can't use the PPP fund account to pay payroll. You have so many connections. You got ACHs, you got everything tied to your operating account. It's really not practical to rewire all of your disbursement accounts into from this PPP account. So what we're recommending, if it's not practical, is every payment you make for allowed costs is you transfer an exact amount over to your operating account. So for example, if you have a $2,500 rent payment that's due during this 8-week period, you transfer $2,500 out of your PPP account into the operating account and disperse from there. Then you've got an audit trail that supports the exact expenditure that you can match up with a lease agreement or some kind of a statement, whatever that is. The key is to create a very clean trail of here's the money, here's how I spent it, here's all the documentation. The goal is to make it as easy as possible for the auditor to see that you properly use these funds for allowed costs. So a few more things. This is very important. only use the PPP funds to pay for allowed expenses. Even if you don't have enough to get maximum forgiveness, do not spend them on anything else other than allowed expenses. A couple things could happen. If you spend it on not a disallowed cost, best case, they're probably going to make you pay that back. Worst case, if you intentionally did that, there could be criminal charges that, Mnuchin's saying they'll bring on you. So only use your PPP funds during the 8-week period for allowed cost, and let any other balance just sit there until after your 8-week measurement period runs. So document, make it easy on the auditor. And being a banker and an auditor, I can tell you, bankers and loan officers don't want to be auditors. So the easier you make it on these guys and these ladies that are working on your account, the more likely they're going to recommend to the SBA that they approve your forgiveness. There's a whole set of guidelines that just came out on Friday for the bankers to use. And it basically says they've got to review your application for forgiveness. They got to tie back some documents, and then they're going to make a recommendation to the SBA on whether you should be approved for this forgiveness or not. And it's up to the SBA to say, okay, we'll delegate the authority to the banker and you will bless it, or they may audit it themselves too. But I can promise you, the easier you make it on the banker, the quicker he's going to recommend that, and the easier it is going to be forgiven for those costs at the SBA level and the bank level. All right, let's go through some of the rules. Many of you know these, but again, some of these have changed. Really, some of them in your favor just last week, and I'll go through some of those. But it's designed to cover 8 weeks of these allowed costs, payroll, which you're very familiar with, mortgage interest. That also includes interest on notes for personal property that's used in your business. So it's not just mortgage. It appears that you can have interest forgiven for personal property that's also used in your business. And the guidance kind of talks about that. Rent and utilities. And they did get some clarification utility. We didn't know what that meant. It's all your typical utilities, but it's also internet service and phone service, personal phone, wireless phones, cell phones. And they have a category called transportation, which they didn't define very well. I'm not sure what that means, if that means car land. I don't know. The guides was not clear on what that number, but they did say transportation under the utilities guidance. I think there'll be more information to come on that one as well. As you know, some of you have got your money and you're trying to tie all this together, and how do I cover my payroll? My payroll periods don't match up to when I got the funds, because remember your 8-week period begins to run the day you receive your cash in your account. So they've given the option in the guides that came out on Friday, basically, with the application last week, actually. It said you can choose an alternate payroll period if it fits you better. So if you have a biweekly or shorter pay period, biweekly or weekly period, you can choose this alternate period. And what that means is I got my money on April 30th, but my first payroll period after that date doesn't start till May 6th. Well, you can choose to begin your 8-week period for payroll purposes from May 6th, running for 8 weeks, if that is easier on you. And then so your 8 weeks will actually extend a little longer than your 8-week period as defined for the payroll component, if you so choose.
David, does that go backwards a week?
No, it does not go backwards.
Okay.
And I'll tell you, and let me tell you, and the guidance again is very clear. And I read 2 or 3 commentaries over the weekend, so I feel pretty confident that as it stands now, this is allowable. First of all, let me cover the second point, and then I'll get into that. Payroll cost does also include hazard pay and bonuses as long as they're paid. And that specific reference is to the interim final rules that were issued on Friday night on Section 3B. It specifically gives an example of hazard pay and bonuses as being allowed as long as you pay them during the 8-week measurement period. You know, a lot of the commentaries talk about from, business attorneys, don't go crazy with this. Don't be tripling somebody's salaries. But if you feel like they're merit for them to have some hazard pay because they've exposed their health by coming into work, or I typically pay bonuses, it's not out of character for you to pay those. And if you pay those during the 8-week period, they can be included in your pay forgiveness request.
Dave,
This,
we have one question about what else
yes,
is included. It says, does payment of interest on a line of credit, is that allowed?
unclear. If you can specifically tie that to personal property, yeah. If not, for working capital, that's one of those unknowns at this point in time. It specifically talks about, tied to direct real assets and personal property assets. So you have a line of credit that you kind of use just in your business, and it doesn't really tie to anything specifically. I would say no, but that's strictly an opinion. That's something you want to consult with your accountants, maybe even your attorneys about on that one.
And there's probably going to be 5 answers to that question.
Exactly. This third item is really what's interesting. It's really cool, really interesting. And unless they change it, it's really advantageous to you as a business owner to play it to your maximum benefit. It defines payroll and non-payroll cost. The forgivable piece is for those that are paid or incurred. So there's both a cash basis element and an accrual basis element built into this. And they give an example. For example, let's go back to my payroll example. I got my money on April 30th. My first payroll, I have a payroll that ends on May 6th, which includes the previous 2 weeks, which was outside my 8-week period. If I pay that on May 6th, I get to include that in the forgivable request, even though it includes some time outside my 8 weeks. Also, from that point forward through the end of my 8 weeks, whatever gets paid or incurred also gets to be requested. So I can have a payroll longer, I can have more pay and other payroll, a non-payroll outside the 8 weeks, so more than what I actually incurred during that time frame. It's the language paid or incurred that allows that. Again, I read like 3 or 4 commentaries. Every one of them consistently said that's the way they interpret it as well. So it doesn't make sense probably to choose this alternate payroll period, because if you do, you're excluded from this small benefit. Because if you choose the alternate pay period, it starts when the pay period begins and 8 weeks later. And this applies to both payroll and non-payroll. It gives an example of rents. Let's say you pay May and June rents during this period, but the May part is outside your 8-week beginning window, that's okay because you paid it in there. And then say you've got some July rent, which is a part of the 8 weeks period, you can accrue up through the end of your 8 weeks for the July. So you can get like 2.5 months. It also talks about, like if you have some back rent you couldn't pay, but you do pay it during the 8 weeks, that's probably allowable. So there's a little flexibility built into the rules. There's a risk they come back and say, that's not what we meant. We'll enter another interim final rule to clarify that. But as it stands now, it looks like there's some flexibility. As long as we pay those payments during the 8-week period, they could be allowable as forgivable costs to be requested.
That is interesting.
That's interesting.
Hey,
the guidance.
Real quick question.
Yes, sir.
Are they still making EIDL loans?
No. EIDL program is closed unless you're in the agriculture-related industry. I don't know any more than that, but basically it's closed to small businesses at this point in time.
Could it be that somebody just hasn't heard yet?
I'm sorry?
Could it be that someone had made application to EIDL, but they just haven't gotten any word yet?
Yeah, definitely. If you made application, it's still in the pipeline to be considered. And I haven't heard that the money's run out yet. They're just very slow. Here's what the SBA was woefully understaffed when this thing came on board, and they never recovered from that. So they're just now beginning. I'm hearing literally every day of someone who's getting approval of their EIDL loan. So don't give up hope if you've applied. It doesn't mean you're out. You're out, because every day they're approving more of these things. And you'll receive an email from the SBA that will give you a link, and you can go in and find it. So no, I think they're still granting them, Andy. I think they're so behind. I mean, this could go on for weeks.
So you cannot go apply. If you have applied and you have an SBA number,
yes,
so there's still the opportunity for that to be approved.
That's correct.
Okay.
That's correct. So don't give up hope. The money's still, literally every day I'm hearing people getting approved for these loans. So I think the process is just still going until the money runs out. Okay, the rules still apply. We've all heard about these. You get the 75-25 rule, which means You have to use at least 75% of the forgiveness. 75% of the forgiveness amount must be used for the payroll and payroll cost, and only 25% can be used for the non-payroll. And this is of the forgiveness amount, not the loan amount. Just remember that. So if you come up with a number that's less than the loan amount, it's the forgiveness amount that this ratio is applied to, not the loan amount. And there's staffing requirements. This really gets complicated and confusing. First of all, you got to do a measurement of your FTEs during the measurement period, during your 8-week period, and compare that to some previous periods. You got two options to look at. It's your choice. You can use a period of February 15th of 19 through June 30, 19, and create your average and calculate your average FTEs during that period. Or you can choose the January to February period in 2020, do them both and choose the lesser number, compare that number to your FTEs during the measurement period, and that'll help you. That's where you will determine whether you have a risk of losing some forgiveness because you reduced FTEs below your pre-COVID number.
So you get your count, whatever your count is, and then you look at your count now, and you can choose which one of those time periods basically serves you better.
Exactly.
And you marry those two up, and you're looking at percentages based on a decline.
Yeah, exactly. So if you had, let's say you chose a period pre-COVID and you had 10 FTEs, during 8 weeks, you only had 8. You have a 20% reduction in employee count. You also have potentially a 20% reduction in forgiveness. So it's a ratio, exactly what you said.
We got a couple of questions here. You want to take them real quick?
Yes, sir.
Back to payroll. What payroll and payroll taxes is not allowable?
Okay, no federal taxes. So FICAs and FUTAs, those things it talks about not being allowed. State taxes, it says state and local taxes. So that is mainly your state unemployments is what you're going to get hit with, because most employers don't have state income taxes that are withheld that they have to pay to match. So state income tax is an employee piece, so that wouldn't be a part. So it's mainly in the state area, it's your FUTAs, your unemployment taxes, those kind of things, but not federal taxes.
Any payroll that wouldn't be allowed?
You know, there was a question, and there's no clarity on this. Part of payroll is your retirement funds, 401k contributions and things. There's some really weird instruments out there like phantom stocks and that kind of thing that really unclear whether you can deduct those or those come up with free, because there is an expense to you as an employer for those types of programs, but it doesn't give you a lot of clarity on that. So potentially there could be some varieties of retirement funds, which are kind of unusual, not your typical 401k that could not be forgiven, but it's unclear at this point in time.
All right, so I got more questions. You want some more?
Yeah, let's go.
What happens if we applied for EIDL and received the grant, but decided not to take the loan? Do we need to return the $10,000 grant?
No, good question. The grant is yours. It's exactly what it is. It's a grant, but here's what happens to it. The grant is deducted from your forgiveness amount when you apply for forgiveness. So if you got a grant and you have a PPP, you have PPP funds, even if you maximize and use all your PPP funds for forgiveness and you use the whole loan, they're going to deduct that grant away from this. You're going to end up with a loan piece because of that grant. So you don't have to give it back, but they're going to take it away from your forgiveness amount when you apply for your forgiven. They'll match that up through the SBA. They'll know you got it. You got to say you got it anyway on the application for forgiveness, but they'll match it up too internally to make sure that it's correct. But that's how that's taken care of.
All right, one more employee question. What happens if we have an employee who retired on 3/31/2020? How do we factor that into our FTE? It'd be just like somebody, I mean, it doesn't matter if it's voluntary, involuntary, it still counts as a number, right, David?
At that point, it does. There's another thing I'm going to go through in just a second. It talks about that in the new guidance that comes out. Mainly applies to things that happen during the measurement period, not pre-measurement period. So at that point, I think that's just an FTE. That's a part of your number that you got to compare it to.
All right. That gets us cleared up on questions. Keep rolling.
Okay. There's a pay requirement too that could reduce your forgiveness amount. if you basically, if you reduce someone's pay from the pre-COVID period by more than 25% during the measurement period, during your 8-week period, there's a dollar for dollar reduction on an employee by employee basis for everything in excess of the 25% reduction. So you can reduce everyone's pay up to 25% and no penalty. If you go in excess of 25%, there's potentially a dollar for dollar reduction on a pro rata basis for the 8-week period to your forgiveness amount for that. In the comparison period, they cleared this up too. We didn't know if they were saying you compare it to 2019, what period? Well, they said now the comparison period is Q1 2020. So the first 3 months of 2020 is your pre-COVID period. You're going to compute this average pay during this period and compare that to your average pay during your measurement period. So they did give some clarity to that number. Right, here's the new provision. There's a new safe harbor out there, and they had mentioned this in the CARES Act, but they didn't really give you a lot of clarity on it. So now here's a safe harbor. Let's say you violated either the FTE or the pay, and you got some risk that you're going to have to reduce some of your forgiveness because of that. There's a safe harbor that if you meet the safe harbor, those won't apply to you. And here's the way it works. You got to meet these two conditions. You have to have reduced, excuse me, either your full-time equivalents and or pay during the period from February 15th, 2020 to April 26th. And that's basically the pandemic period. When all this stuff started happening, people were laying off and businesses were closing, and that's the pandemic period. So during that period, if you reduce pay and or full-time equivalents, you've got the ability to apply the safe harbor provision. And what that says is if you had that happen, if by June 30, you restored the FTE and or the pay to the amount that as of February 15th, 2020, you've met the safe harbor and none of these exceptions apply to you. So you got to think about that. You've got some ability to fix this during this 8-week period if that's your goal, is to maximize forgiveness, and it makes financial sense for you to do that. So by June 30, if you basically restore everything to your February 15th levels, if you had reductions during that time frame, you can get out of any other exceptions if you were going to fall under those exceptions for FTE and average pay. So you got to think about that. The application, I will tell you, helps you walk through that. It'll make a little more sense when you go through the application for forgiveness, but this is the safe harbor provision that gets you out of those exceptions.
A lot of moving parts, David.
Yeah, a lot of moving parts.
You got another question? You want one?
Yeah.
So I feel like we're in like trivia night or something. If you've got PP money on May the 1st and the train was traveling 140 miles an hour west.
Yeah.
I'm totally kidding. Hang on. So got the money on May the 1st, but did not reopen the business until May 26th. So first payroll isn't until June 6th. Mm-hmm. Can that act as an alternate payroll covered under the payroll covered period start date?
No, the guidance says your next payroll commencing after date of receipt of your cash. So I don't think a month is going to meet that requirement. The good news is what I started off with earlier in the news. I think they're going to extend these time frames. Hopefully it's not too late for you.
This is exactly what this person.
Yeah, exactly. So as it stands now, no, that probably would not apply because it talks about the first payroll following date of receipt is your alternate period beginning. But if they extend it, you'll have more grace, obviously, if they extend that period. I think that'll happen. I mean, there's nobody, Congress supports it totally. It's just deciding whether it's 16 weeks or 24 weeks or whatever. I think there will be extension. Hopefully it's not too late for you before your 8 weeks runs at that point in time.
And there's another question about the balance between payroll dollars being equal and number of people, right? So there's a balance between the two. The question is, what happens if we decrease our FTE significantly, but also increase the average pay per FTE significantly?
Well, you're going to have the FTE exceptions is definitely going to come into play if your FTEs are way down. So you're going to have that exception. You may be able to meet on the payroll if you can justify those increased amounts for hazard pay or whatever basis you use. It's up to you to defend that. So you couldn't meet the payroll amount, but you're definitely going to suffer on the FTE amount. And that penalty may be so severe, you may want to rethink that. I mean, it's if you go down by 50%, 50% of your forgiveness amount could be reduced if you reduce 50% of your FTE. So you really got to think through this. We advise you to do a forward-looking projection of all this, is best information you've got to kind of design what you think the end game is going to look like, so you can make some changes within the measurement period. So don't wait till week 7 and say, I don't know if I'm there or not. Let's see what it looks like. Start today and do a forward-looking projection using the best information you got to decide what it looks like. And then you're better able to plan at that point in time. So you got to weigh the financial impact, and just what you said. The FTEs are going to impact you. Maybe I can overcome the payroll thing, but the FTEs are definitely going to have a major impact on your forgiveness if you had significant reduction.
All right, how are you on time, David? Because we still have questions coming in.
We're good. Let's close the question. These are important. The Main Street thing isn't even. I just want to expose them to that, so we don't have to spend much time on the Main Street lending.
So we'll get a couple questions and then kind of move on. Oh, she's tricking me. She put it in the chat and in the question thing. Thank you, Shelley. All right. So if someone has been making a lot of overtime, but now are only working 40 hours, do you know how that would be viewed?
Yeah, in calculating full-time equivalents, they're saying 40 or more hours creates a full-time equivalent. So as long as you're working 40 hours, even if you work more, you don't get any credit for that because it's a person-by-person calculation. So 60 hours doesn't give you 1.5 FTEs. 60 hours for one employee is 1 FTE. The guidance is very clear on how that's calculated.
If they were making overtime hours prior to COVID, not making overtime hours, say their compensation was 20% heavy prior to COVID, that will be a reduction on the other side.
Yes, exactly. From the pay side, yes, exactly will.
Okay, awesome.
All right, we'll move through these.
Go back to you.
We've been asked this question a lot. What if I tried to hire them back and they didn't want to come? If you meet these requirements, you don't have to count them against you from the FTE calculation. You have to make the offer. It's got to be equivalent to what they were making before and the number of hours. They've got to reject it. You've got to have records documenting that you did all this. Here's the kicker. You have to have informed the state unemployment offices this person has rejected your offer, which is probably going to kick them off unemployment, which is what it's designed to do in the first place, bring them back to work. So if you meet those requirements, you're not penalized, but you're probably going to have a pissed off employee that you've turned them in because they've rejected the offer. So you have to decide on a business by business level. So, but if you do this, they don't count against you as an FTE penalty for you.
So I can make them an offer, they can decline it, I can notify the state, and that counts as one of my FTEs.
As long as you document all, yes. So you don't have to deduct them you include them as an FTE during the measurement period because you made your best efforts to bring them back and they said no. And these 5 bullets are laid out specifically in the guidance.
Okay.
One other thing, if the employee does some things during the measurement period which causes them to go away in some form or fashion, you're not penalized there. So if they quit, if they die, unfortunately, you don't want to think about that. But if something happens and they go away, you're not penalized because you didn't take the action.
So say that again. If an employee leaves during the 8-week period.
During the 8-week period, I come back and I say, I don't want to work here anymore. And I leave on my own as an employee, then the employer doesn't have to count that as a reduction in my FTE count. You get to include that person in your FTEs.
Okay.
We talked about the grant. It's going to reduce your forgiveness amount. And also these, as it stands now, these expenses, which you're going to get forgiven for, cannot be deducted on your tax return. A little bit of misunderstanding from the original act here, but as it stands now, you can't deduct these costs if they get forgiven at this point in time. Again, we think that may change. Congress A lot of people in Congress are saying we need to override this. They haven't taken any action yet. But as it stands now, if you get forgiven for these costs, you can't also take them as tax deductions on your tax return.
Yeah, that was the point that I went a little crazy about.
Yeah, yeah. So if you're doing estimates and you had previously included these deductions in your estimates, make sure you adjust your estimates accordingly. I won't spend any time on this, but kind of another best practice, track all these costs that you're incurring for COVID, for training, for cleaning, for your time. Just track it somewhere. So at the end of the year, you kind of know what your number is. This is an extraordinary expense you're going to incur this year as a company. At some point, you may have to justify what that number is, either to a banker or an investor, or there may be a benefit. There may be a tax credit for some of this stuff. So best case, start tracking everything currently, including an estimate of the time you devoted to all these extraneous COVID things that you wouldn't normally do in the course of your business. May never even have to use it, but you'll be much better served if a year from now you need it and you can't go back and recreate it at that point in time. It's next to impossible.
And David, you were in the housing downturn in 08 and 09 and lived this exact, because this is why you brought it to the table very early for us, because you were in the banking industry and you couldn't go back. You had to go back and recreate a bunch of stuff.
Yeah, when the recession hit, they pushed all these compliance requirements on banks that they'd never had before. And it was a lot of cost and a lot of time and effort. At some point in the future, they gave some banks some credit. I don't remember if it was tax credits or benefits on their franchise tax, whatever. So we had to go back and recreate it as best we could to say, here's all the excess costs that we incurred. So a learning was, do it now as opposed to later.
So every single thing you're spending money on, make sure it gets documented somewhere, preferably in your P&L under a COVID-19 expense line GL code.
Just track it separately so you've got it down the road, a year from now.
Okay. Keep going. I got some questions piling in.
Okay. We can go a little longer if we need. This is the application. We'll send you a copy of it. If you want to get it, you can go to the U.S. Treasury website, and they've got a copy to download. This is the application. It's 11 pages. Of forms and instructions you got to fill out. I've been through it. It's fairly intuitive. You'll probably still want to get your accountants maybe to help you with this if you're not so inclined, just so you get the calculations right. But it is out there. It explains what you have to do, and it leads you to a number. Good news is, get this on my screen. My friends at the AICPA, the American Institute of Certified Public Accountants, have created a worksheet that matches the application. So if you fill out all these forms, all these worksheets, they match the application. It'll lead you to your end result. You basically can take these worksheets and fill out your application. So again, we'll send you this, or you can go to aicpa.org. It's on their front page. You can download a copy of this, but I've used it this weekend. It's really intuitive and makes it much easier for you to calculate all the things that go into filling out this application request. And we'll send this along in the handouts section after the session.
We'll send a recap, and you're the only person who spent their Memorial Day weekend playing around with an Excel spreadsheet.
Yeah, you know me. I'm a little geek. When I'm not out boxing or climbing mountains, I'm sitting there doing that. So. All right, so you'll ask for forgiveness. You'll fill out this application. You'll give them the audit documentation that's spelled out in here, what you have to submit, payroll records and lease agreements or canceled checks or whatever. The banker will review it. Hopefully they'll say, looks good. They'll call the SBA and say, this guy gave us what we need. Here it is. We recommend it be forgiven. Within 60 days, they'll make their decision. At that point, the forgiveness for whatever you're forgiven is now relieved. It's no longer a loan for you. Whatever's left over becomes a 2-year note at 1%, no payments for the first 6 months. You'll work out some kind of repayment schedule with the bank, probably like an installment note, and you can prepay it. If you get to that point, say, I don't need it anymore, then you can prepay it with no penalties.
David, did that go to 2% or did it stay at 1%?
I think it's still 1%. I haven't seen that. I haven't really looked at that, to be honest with you, but I think it's 1% still.
Like the last thing we've been thinking about.
Yeah. I'm worried about get forgiveness, not getting the loan, but I think it's still 1%, Andy. Again, if you've used it for unauthorized purposes, if you bought that new vacation house somewhere, you're in trouble, or you could be in trouble. So don't use it for anything more than the allowed cost at this point in time. Or they could file some charges or at least make you pay everything back. All right, I'm not going to do this poll. That's the PPP fund. That's what's been the hot item. That's the forgiveness piece. The information has really gotten a lot more clear in the last week. There's some interim rules that you can go on the U.S. Treasury website and download the new rules that are out on how to apply for forgiveness. Gives you all kinds of examples. It's about a 22-page document if you want to go through that. And then the application's available too. So PPP funds is a hot topic. I just want to spend a couple minutes here, Andy, because this isn't even active yet, but I think it's important if you don't know about this. This gets us through, some period, 8 weeks, 10 weeks, 16 weeks, and helps us maybe get to that side. Chances are the economy is not going to be up and running full speed. You're not going to be up and running. So you're going to still need some resources in all likelihood when we get to the other side of the PPP fund equation. The Federal Reserve has come up with a program called Main Street Lending, and the sole purpose of this program is to put liquidity on the balance sheets of good companies. This is not for startups. It's not for struggling companies that are on the verge of bankruptcy. It's for companies that are solid. They want to keep you in business. So they've developed this program to put more liquidity on your balance sheet. And I'll specifically talk about a couple of those terms. We won't get into too much detail. But it's called Main Street Lending. Chances are you're going to need more funds after this PPP stuff runs out. In likelihood, $600 billion in funding, Federal Reserve working through financial institutions. So this will be made through your banker, just like the PPP fund loan was. And these are loans and they're not grants. They cannot be forgiven. 3 facilities. There's a new loan facility. There's one called the priority loan facility and one called the expanded loan facility. Each has some different characteristics. You could qualify under all 3 potentially, but you can only use one of the facilities. So you got to make that decision. It's for big companies and small companies. You have 15,000 employees, $5 billion in revenue. So it goes from the small business all the way up to large companies. And if you participated in PPP, it doesn't preclude you from taking this loan as well. So it's just an additional liquidity measure that everyone should be thinking about, because who knows how long this is going to run. If we have something like a W recovery where things, happens again in the fall and everybody has to shut down again, we may be in this longer than we hope. So now's the time to line up liquidity. And this is what this program is for. These are the programs, and we'll give you these slides again. Basically, the first 2 are probably the ones that most of us are going to be eligible for. Minimum loan size of $500,000 up to $25 million. The third one, called expanded loan, is a minimum of $10 million. So not a lot of companies probably that we work with that are on this call are going to be eligible. You may be, but probably the first 2 are the ones you're going to be looking at. A couple of specifics about the new loan facility. A couple of things. LIBOR plus 300 basis points. LIBOR is literally 0 right now, so it's about a 3% loan right now, and it will float. It's a 4-year note. The amortization of the new loan facility is no payments year 1, and then a third, years 2 through 4. 1% fee to get the loan. And that last bullet item, it cannot be contractually subordinated to other debt you've got. That's the differentiator between that one and the priority loan system. So the bank can allow it to be subordinated, but you can't contractually subordinate it. So it's up to the banker. And it could be secured or unsecured. All these facilities could be secured or unsecured at the banker's discretion, depending on your credit quality, credit worthiness. The calculation for the new loan facilities, think about it. The maximum loan is the lesser of $25 million, or a calculation based on EBITDA. New loan is based on a calculation of 4 times your 2019 EBITDA, less your existing outstanding and uncommitted debt. So you may have some uncommitted lines out there you have to consider as well. So whatever the difference, if there's a difference there, that's the amount you can borrow under the new loan facility. So just think a new loan is 4 times EBITDA. That just kind of put that in your mind. That's the calculation. That's the driving point for that one. Priority loan is basically a very similar loan, its repayment is a little different. It's nothing the first year, 15% year 2, 15% year 3, and 70% a balloon year 4. So this will help your cash flow much in the first initial years. You got to make a big payment in year 4. So this may fit you better because of that. Also, there's a higher priority on this. You have to make this loan senior to or pari passu or equal to priority and security of any other loan you've got. So you increase the level of prioritization on this loan versus the new loan. And the calculation is based on same calculation, except it's 6 times EBITDA. And the reason that is they would allow you to refinance some existing debt you have another lender, not the lender you're working with, but you got some debt outside with another lender, you can throw that into the calculation. So that's why there's a bigger multiple, 6 times, to give you a bigger number to play with versus the 4 times under the new loan. That's basically the difference in the way that's calculated. And the expanded loan is a huge loan, and it's got 3 qualifiers, same payment terms as the priority loan. Maximum loans is less for $200 million. This is a new one, or 35% of your loans committed and outstanding are uncommitted. So 35% of that number, or 6 times the EBITDA minus your debt. And that gives you a different result depending on what your debt picture is, obviously, in those. You're going to have to, here's where it makes it, talks about it being a liquidity measure. You cannot use this debt to repay existing debt, pay off old lines of credit. You've got to agree, both the lender and you, that you're not going to cancel existing lines of credit. The purpose of these loans is to add more liquidity. So we don't want you to go pay off all your debt and just substitute debt. It doesn't help you. Purpose is to add liquidity to your balance sheet. And that's what all the attestations revolve around. This third bullet is kind of important. As a borrower, you have to attest that within reason, I'm going to be around for the next 90 days. I'm going to be able to pay all my debt, all my obligations, and I don't plan on filing bankruptcy. So they're going to make you attest to that. So if you know you're going to pull the trigger within 90 days, do not get this loan, because they will come after you for this, filing this attestation. Now, if things change dramatically, and it happens, obviously, but if you have foreknowledge of this, you're probably best not to sign this attestation and get this loan. There's some limitations on pay, distributions, dividends that you've got to comply with as well that comes under the act. Just be aware of those. Obviously, consult your legal counsel before you take any of these borrowings. One other thing is kind of interesting. You've got to agree or be able to say in good conscience that I will make commercially reasonable efforts to maintain my payroll and my employment during the time of this loan. So if you get a 4-year loan, you got to feel like, yeah, I am going to do that within my best information today. I'm going to make efforts to do that. So if you intend to fire everybody next year and you know you're going to do that, you might want to think about it. So they drop that into the loan. They'll be in the loan documents as well. Here's some examples. Won't go into these. I got 4 different scenarios, 4 different companies, let's say, different EBITDA amounts, different debt amounts. So just go across. And I've calculated the loan amount that they'd be eligible for under each of these scenarios. And this is exactly what you should do right now if you're interested in these. Kind of start to model some of these scenarios so you have an idea of, first of all, which program you'd want to participate in, and to see how much it would help you out from your cash forecast needs. The good news is, we've created a little calculator. We'll send it to you. It's a simple spreadsheet. You drop in your EBITDA from 2019. You drop in your debt. It'll kind of give you an idea of the loan amounts under each of these programs. This program is not live yet. They haven't even given the guidance to the banks on how to make it. You probably know as much as the banker knows now about these programs, but the time to be thinking about it is now. So you're prepared to get this money. The best time to look for liquidity is when you don't need it. A lesson learned. As a banker back in the recession, we were more than happy to make loans to people companies that were doing well. But when they came to us and they're on their last leg, we weren't making loans. So while you're strong, while you've got the ability to request these loans, get them now. I've probably got some members that are going to get these loans, put the money in a bank account, and not even use it until they need it, because you can always prepay this thing without a penalty. get the money. If you think you're going to be at any point in time, need some more cash to weather this storm, this could be your source of future liquidity. We'll send this calculator also with you too.
Yeah, there'll be a whole package that comes out in an email to everyone that's registered for this webinar after the webinar. So you'll get that.
We'll send you, I've got term sheets on all these programs to give more definition of what they look like. There's a Q&A along with several of these calculators. So
you want a couple more questions, D?
Yeah, really done now, Andy. I was just going to say, cash is king, what I just said. You can never have too much cash in times like these. So make sure you're projecting your cash out 30, 60, 90, 180, do different scenarios, of up or down economies, and make sure you feel like you can weather the storm, and then look for liquidity.
Well, let me ask you, there's a couple of really good questions in here. Because I can tell we have some entrepreneurs because they're thinking in here. It's really cool. So what if your average monthly salary calculation included 1099 contractors? Will those payments be forgiven if they are paid outside of payroll?
No. It specifically says 1099 contractors are not included in the payroll calculation. They had the ability to apply for their own PPP funds as independent contractors. So they are specifically excluded from your payroll calculation.
Is that time period expired?
No. The funds are still out there. So they can still apply for their own PPP funds as long as the money's in the account. I think it's going to go through, it was June 30, but I think they've extended it to September, and it's probably going to go through the end of the year if the money still holds out. So now, you still are eligible to apply as an independent contractor for those funds.
All right. So if you've got contractors, make sure you tell them that. So this was the question about the voluntary retirement that I asked you earlier. It says, can you use the good faith offer to bring an employee back in the case of the voluntary retirement? Ask the employee to come back, and if they don't, they won't count against you.
It's kind of borderline if they've officially retired and there's documentation supporting that. I guess you begin to get into the fuzzy area at that point in time. If they've officially retired and you had the party and you've given them the gold watch and there's records indicating all that, I would consult my professionals to make sure that you think you could comply with that.
That's why I said as an entrepreneur on here asking some questions.
Yeah.
Says, with that said, I guess I'm confused about the retired employee. He planned to retire 6 months prior. It just so happened that he retired during all of this. So It doesn't seem fair to be penalized for this.
Agree. The record, it's not totally fair all the way it's written, but again, I would build my best case, talk to your professionals. If you feel like you can defend that, represent it to the bank. Don't try and hide anything, but see what they say about that.
I had 2 temporary employees through a temp agency prior to February. Can I pay the payroll for those temps?
Yeah, if they're employees, even if they're temp, they're still employees. So yeah, I think you can count that. Sure. Even though they're temp, they're still employees.
Shelly says, David, I love your artwork back there.
Welcome to Mo's.
All right. So let's see, we already received our loan money, but we will not be open until after June the 4th per the governor's orders. So we have no payroll costs until after June the 4th. How will that work? Payroll costs have been, how will that work if payroll costs have to be 75%? Same. Yeah.
The rules aren't fair for those industries that could not open up early. That's why the restaurant industry are lobbying heavily to extend this period. Hopefully that's going to happen, and you'll get 16 weeks or 24 weeks to begin to use that. But right now, as it's written, it's 8 weeks. It's not fair if you can't get your business open, but it is what it is the way it's written right now. And
there's a lot of conversation about extending the time period to cover exactly this scenario.
They're almost certain they're going to extend it. It's just that they don't know when it's going to happen. Congress is now kind of out, and Senate's got a different version. The House has got, they all agree it needs to be extended. Now they got to decide what the number is going to be and when they can do it. So yeah, I think it's going to happen. I don't know when.
So David, just stay in touch on that one. David George. If I put employees on unemployment, but still pay them cash to keep them surviving as bonuses, will this count?
I'm going to say no, because that's the right answer. Talk to your professionals. How about that?
All right, cool. That looks like it's got us through all the questions, David. Really appreciate you doing this, man. I'm so proud of you for putting this together. Great content. I think that's the most questions we've had from any webinar we've ever done. And I know that this is something that everybody's interested in, and it's confusing as hell.
Yeah, it is.
On top of it, and continue to do so. So if you're still on the call, you will get an email from us with all the documents and the information that David shared. We recorded this so you can rewatch it. And then, follow us on Facebook. We did broadcast this live on Facebook today as well. Follow us on Facebook and Petra Coach. Go to the website, sign up for our newsletters. Find David online too and follow him, because he's really the mad genius behind all this stuff. If there's anything we can do at Petra, let us know. We've got webinars, we've got workshops, all kinds of stuff that we brought to the table to get us all through this time period. So David, thank you again. I appreciate you being here.
Thank you for having me.
All right. We'll say goodbye to everybody.
Thank you guys.